Hi, everyone, and welcome to this next edition of our show, Market Makers, on which I interview all the top guys of the market, the big boys, so to say. And today we have with us a very interesting guest. Possibly, we kind of made our gray hair together at starting almost at the same time. So, our guest today is, say, Balasubramanian. He doesn't need any introduction as CEO of Aditya Birla Asset Management Company Mutual Fund. And Bala, very welcome to our show.
Thanks, Manoj. I still remember the early days of discussion when both of us sitting in the bond market trading desk. So what you said is right. We have grown together. We have also grown the gray hair together.
So I must tell people who don't know. Possibly now it's almost 4 decades ago, right, Bala? That you and I practically we must have started at the same time in different organizations. We were like money market dealers,
Yeah.
just trying to learn and make our. And it's great to see that Bala's still going strong after all those almost 4 decades, and I have hung up my boots.
Of course, time will come for everyone. I remember 92 when I started as a money market trader in GAC Mutual Fund. So I used to deal with all of you as my counterpart in the being part of the bank. So I'm on the other side of the coin, and you're on the bank side of trustee. So I deal with almost all the bond market traders then, and I remember trading across the market. So what is right? That's the time. Those were the days where the information's availability was less. You have to
Of
make your own
course,
intelligent guess, and basis which
yeah,
you
yeah.
must plan your day.
So, I must say that what has happened, Bala, is that today you're identified as a Aditya Birla Mutual Fund, with Aditya Birla Mutual Fund, because really made your bones there. I guess the fund was a fledgling when you started, right, working there. And today you've taken it. I think you have to get the maximum credit for taking it to the size and today's level that you have. So, who better than you to talk about that? And that's the reason why everyone identifies you with the fund. So let me start by asking mainly about the fund and your association with it. uh, you have been associated for a long time. I don't know how many years, and I'm sure you've also lost
31
count.
years.
So can you tell us that? Wow. So I guess in the industry there must be hardly anyone who has been associated with any single organization for that long, right, in your industry.
Yes. Yeah,
I'd
that's
be
true.
surprised.
Yeah, that's right.
Yes, so that's very impressive. It also talks a bit about not just yourself but also about the Birla culture, the Birla group itself. So question to you. Been a long time, uh, been a journey, I'm sure, with lots of highs and lots of lows. Want to share a little bit about the experience and what you enjoyed about it, maybe a couple of high points.
Yeah, sure. Now, first of all, thanks, Manoj, for having this interaction. Of course, when we started in '94, I mean, the AMC started in '94. I joined in '95, and as a bachelor, when I joined, the responsibility of set up the dealing desk. There's no money to deploy, but having the infrastructure and the people in place is the most needed assets when you start the business. It was more like a startup. So when 94, when 95 we started, it was more like a startup as we are seeing today, most startup companies. As a startup companies, you have to do, of course, multiple things. And in my case, since I was a bond market trader, setting up the dealing desk, setting up the processes, setting up the counterparty limits, setting up the the empowerment process which need to be carried out, whom do you deal with, whom do you not deal with, and have the standard operating process for investment side. So jointly with my boss, Mr. Bharasha, was there, as well as SK Mitra, who was my MD and CEO. Then, so we set it up. So, so the sometimes when you work like a startup company, you end up doing multiple things. You're not only, of course, a trader, you're not only an investment guy. You also end up doing multiple things, including liaising with the external world. So that's why we all started the career, and therefore that gives a lot of holistic experience as to how to manage things in a multiple, basically wear the multiple hat. Since you have limited time within the period, you have to have multiple hat. and basis we do things. So that's one was the first learning curve. Second, in terms of um, high point was that's a period where the whole administrative interest rates were actually changing. And if I the whole administrative interest rates, whether it's for PF or bank rate and guaranteed returns, are all going down. Therefore, understanding the market policymakers mindset and the way forward, and then position your investment strategy, keeping the new world in mind. As a company moving it from old world to the new world, which is a controlled environment to the free environment. When you are let go free, that's the time the challenge always comes, which direction which you go. So when you are controlled, you are always efficient. When you are not controlled and you have free environment to your work, then you need to change your style of operating, style of investment. So that was the period where it got changed. In fact, since then, as an AMC, we have seen cycles, and we had a period, good period, bad period. We have seen a 28% kind of interest rate regime then, and we also seen 4.9% 10-year bond yields touching the lowest post Bimal Jalan exit as RBI governor. And we have seen those cycles. Then within that, managing things, taking into account these aspects was very, very challenging as well as interesting. Very difficult for me to call any high point or low point because we've seen so many cycles. It will be very difficult to amplify which is high point. But only one high point, I probably also low point, I would say, is there are high points. I think there was all of us felt that interest rates will not be cut because we have almost touched the lower rate possible. And that's the time Bimal Jalan on a Saturday afternoon, that was the last policy of him, he cut the interest rates. After cutting interest rate by 25 basis points, bond markets reversed. Instead of rallying, it actually went against us. So all of us on the hope that build a position in bonds and completely went against us, and one we got off guarded. And second is another lower high point is the September 11 attack that happened in the US. The World Trade Center got hit. And we were sitting in the office till about 11 in the night, tracking the bond market globally. And then we all run positions in our on behalf of investors. So that one was one of the challenging periods that we saw. We saw it in front of our eyes. And then managing the portfolio during that time was extremely tough and challenging as well. But while doing that, this experience definitely gave us a growth. In fact, as I mentioned that today on a 31-year completion, we are managing close to about 4,40,000 crores of assets and management all put together. So many people have played a role. So I would only take to the extent of credit that I was one of the continuity factor. But there are many people around at the same times at multiple times, different points of times, responsible for different things. On each stage, I think we grew and the change of management and so on and so forth. And of course, the shareholders' deep commitment to focus on financial business and therefore giving importance to asset management company coming from one of the private sectors in the country, coming from Aditya Birla Group. So give it much needed importance for the asset management business to grow. So all these things helped us in building only. But the high point, I would say, between 2007 and 2008, 2007 was a great bull market period, and 2008 was the worst period because of the Lehman Brothers crisis. And in fact, we as a fund house got 2 awards as the best fund house of the year award for 2007 and 2008. Bull market, bear market. I was the CIO then and responsible for both the equity and fixed income investment. It was a high point, I would say, that winning consecutive 2 years Fund of the Year award, competing with so many other mutual funds, and winning that award from reputed firms like CNBC and CRISIL was a high point, I would say. And after that, that was the only time we got 2 consecutive years the Best of the Fund of the Year award, which is nothing but efficient on fund performance and also the efficient on the overall delivery of investment outcome to the large pool of investors who repose their faith on us.
What's most interesting, and I was smiling, Bala, because all your high points and whatever you mentioned, a lot of it was almost coming out of a trader's mouth, and which gives me great pleasure because most of the people I've spoken to so far all have trading backgrounds. At heart, they remain a trader. We used to say always, once a trader, always a trader, and all that.
Correct.
So I'm very happy to note that you carry that with you still. But what is interesting also is that you did credit for the success not just yourself, all the others of the fund. And I think that's very important, particularly as you stand out as a CEO for a long time. So my next question is that amongst, when you're a CEO, you are many roles rolled into one, right? You are a risk manager. You have to take trading views. You have a lot of, I think these days the AUM is a dirty word, or the key word. I don't know what to say, but your entire focus has to be AUM. So clients, investors, that is a focus. Kind of a sales job. And then thirdly, people management. So, according to you, what for you is a priority? And I think that would be the priority for CEOs across the industry, I guess. So,
Correct.
what is the priority? How do you deal with it? And, what do you miss if something is not a priority in these three things?
Correct. Correct. I think it is an interesting transition, I would say, from a CIO to a CEO. So when I made that move, when Mr. Birla asked me to take charge, even Ajay was there that time, as Srinivasan, and Pankaj Razdan was there. So they when they asked me to take the charge of a CEO from CIO, definitely I took it with the whole heart, no doubt. At the same time, not having a clue in terms of how I'm going to manage that. Then I realized investment and the CEO positions more or less links to each other, ties with each other very closely. Because in investment, you analyze companies and question the various management leadership in building the business. So when you are given the charge of building the business, then you need to apply the same principles as a CEO. It doesn't change. And therefore, don't try to rediscover, but try to improve upon the learning that you had in the investment side. Second, from a business point of view, I always used to ask every basis points counts. As a bond market trader, as you rightly said earlier, for us, every basis points counts in terms of converting that into a price action, and then see what's the impact on the bottom line, both on profit as well as on loss. So I used to always keep a very close eye on basis points improvement in terms of market share, in terms of profitability, in terms of revenue, in terms of P&L impact, and so on and so forth, cost. So that came as a second priority. And third, of course, is the given the opportunity that exists. I think given our brand, which is the Birla brand, it's every household knows the Birla brand. We don't need to hard sell. Therefore, going down the hinterlands of India and expanding the business, that's only one which will give you sustainable AUM for the long term. And we must also help customers, investors to commit the mutual fund as a thought leader of the industry. Therefore, we went beyond the top 10 cities and started setting up branches so that we can reach out to hinterlands in the country. That's something which came. But two things which remain as the central theme of the other things. Investment remains the central. I call it the heart. And then second is risk management functions. Given the fact that we are here to not only manage the return, rather generate return, even manage the volatility, taking into account various risk that will come and hit you at any point of time without telling you. Therefore, be prepared for the risk, which is nothing but always on top of the job, and ensure that the risk is always understood by way of how we are managing the money. And the risk is not just only on managing money, risk is on people, risk is on process, risk is on customer service, and how do you respond to the customer queries, and so on and so forth. The customer remains the core, the business model. So that's something came as part of the regular activities. Therefore, when I started engaging, I said people are the key. When our success driven on with the people. I also realized from a CIO to CEO, when we are responsible for the larger team of people, the engagement of the people, communicating with high clarity with the team, and set the ball rolling so that they run with a single point vision for the future. So they're able to add a lot of value to the customers in general in many ways. So that's something became a very key priorities. And therefore, these were some of the big focus area that I had. And for me, ultimately, what is most important is reputation risk is equally important. Therefore, anything that we do, always in a subconscious mind, I always think that you are managing public money. The fiduciary responsibility is high. Therefore, you have to operate within the regulatory framework. At the same time, we must also become a role model in following the regulatory framework. In fact, I often tell our board as well, the last 31 years, touchwood, we never had any kind of regulatory related issues. Therefore, we have to get either penalized or something. So that's something something will never be told, never can never be it can never disclosed anywhere. But this goes untold. But these are some of the things also
Absolutely.
top of the priority.
No, this is very well said because, if there is an incident, it gets highlighted like anything. If there is
Correct.
no incident, there are no awards for it, right? So, but having said that, I was on the board of a smallish fund, a newly formed fund, asset management company for some time, and I can tell you that reputation is critical primarily because everybody has to understand you're a custodian of others' money, and this is really down to retail.
Correct.
Honestly, there's no compromise on reputation and doing what is right. So
Correct.
not just in letter but also spirit. So I think I really appreciate that, and it's well said. Which brings me also one more comment. Like you highlighted a lot of what you do, which is not really trading, and I must tell you that you mentioned when 9/11 happened and everybody was tracking it. I was at a foreign bank and I was an American bank, and we had a huge loss. We sat over it. We fought a lot that it's going to come back. Ultimately, it did come back. But I can tell you that was the time when it struck me that I was not losing any sleep over it, nor was the plus that we made afterwards or whatever very exciting me to that extent. So that's when I realized that maybe my life as a trader, I should try to do something different. And as things played out, you ultimately do something, and ultimately all of us become salesmen and risk managers, right? That's how I like
Exactly.
try,
Exactly.
try to think of it. So
Even
I think
as a
very good.
CIO, or investment guys, one of the big job was for us was not only just managing the money, is also educating people in the external world, communicating with the customers, communicating with the large pool of client base, and give a sense of the importance of investing in capital market, both in equity and fixed income. So basically, imparting knowledge also was one of the key area of focus for us. In fact, personally, we have done lots of things in addition to just managing portfolios.
No, fantastic. Good to hear. Now, one question, and then we'll talk about market. But the question is more on what's next for ABS MF, and of course for Bala personally. How do you see further evolution? And I guess we can extend this to the industry as well, right? Because we are
Correct.
not in a kind of vacuum. So
Yeah.
can you tell us a little about that?
I think for Aditya Mutual Fund, we had being one of the old player, and we did exceedingly well. We became almost number three fund house in the country, going ahead of most of the other big stalwarts in India. Only using the brand of Aditya Birla as a brand and the people, and we did a lot of hard work in terms of setting up our own distribution network across the country. That's something we did, and that continues to remain as a focus area for us. That's why we're managing large pool of money, about 4 lakh crore plus is coming on the back of that. Close to about 1 crore customer base we have, close to 2 lakh crore equity assets that we have, having a presence about 280 locations. I think we continue to believe that the opportunity remains very large. Underpenetration in Indian mutual industry is high, and despite the industry is going through a lot of appreciation for having a growth substantially higher than the GDP numbers in the last few years, but still we still have a long way to go. Therefore, IIFL Mutual Fund equally remains committed. Though we are a 30-year-old organization, we have to still behave like a 3-year-old organization and continue to drive the business growth. So that remains a hunger for growth is still high. And the second is surveying large pool of growing customer needs in the country by way of a thought leader providing solution to their investment needs. That remains big area of focus. Therefore, the aim is to take that, if not number three positions, at least having a decent market share. Our peak market share is almost about 9.8%. Our peak market share,
Right.
and then maintain the peak market share. Today we are about 6%, and then coming
Right.
close to the peak market share will remain one of the big area of focus for us. And today we are managing about. I have actually put a slogan internally that आगे बढ़ के 10 लाख पार का AUM
Oh,
होना
wow.
चाहिए. So I've been pushing my
Right.
employees across the country before. I've spent good number of years. In my next say 2-3 year period, we must gun for 10 lakh crore size, with about 2 crore customer base coming in. So that is a broader drive in which we are driving the business.
That's like Sachin Tendulkar's 100 centuries target.
Exactly. Exactly.
So now, my favorite set of questions, and I'm sure, you know, being trader at heart, this is really the key part of the interview. Is what's the view on equity markets going forward, short term, long term?
I think my personal belief is we will start seeing the upward trend coming back for two, three reasons. One, of course, I'm a believer that market knows uncertainty when the uncertainty gets announced. So as it stands today, all the uncertainty that seems to be hovering around our country, which are around the tariff and slowdown in growth and so on and so forth, they're all there in the price. I think increment that will happen. I think will happen more towards get the growth back, which what now is happening. GST reductions, all in the form of actually fighting back to get the growth back, which in my view will start reflecting on the earnings of the companies and so on and so forth. Therefore, equity market I am reasonably bullish for not just only long term, even for short term. You will see some kind of pickup. This will be supported by festival season around the corner. This is a probably year where the government of India may also do like loan mela they announced a few years back. They may also do big time, not just a loan mela. Even mela they can do for improving the purchasing behavior of consumers on during the festival time. I think this year government is deeply committed. Very fact that they have said that GST they will cut, which essentially means they want to now focus on the consumption-led growth for the country, which is more sustainable for long-term point of view. Will not be cyclical; it will
Yeah.
be permanent. So therefore, I am quite bullish on equity market. And last but not the least is market has gone through a time value correction. Therefore, market will start looking at the 27 earnings, which in my view will be better than the 26 earnings. Therefore, the earnings expectations may also start setting in from the broader point of view. And finally, Reserve Bank of India, monetary policy authorities have been extremely accommodative to create a pro-growth policy, where the stance is also more towards growth rather than focusing on inflation, which also a very big change from a monetary policy standpoint of view, which also be the driver of growth. That means reassuring the growth is the focus for the whole country. Therefore, whatever currently we are uncertain we are going through, I always believe the best time to invest during the uncertain time, and the best time to probably reduce the investment is actually when the going is the best. So if I go with the principle, I would say the current uncertain time is always providing an opportunity for one to
Sure.
consider investment for long term.
Fair. Thanks for that. And you just mentioned in passing about rate cuts. We've had 100 basis points rate cut since the new governor came in, but 10-year yields are almost just about 20, 30 basis points now down from the peak
Right.
when he came in. So I'm sure you have a lot of discussions with regulators, with policymakers. I'm sure you're in a few committees. Uh, you know, why are we still struggling on transmission? Through not just on government bonds, but even it's not reflected in final rates offerings to customers. And how do we go about it? Because see, like you rightly said, everybody is very keen that interest rates have to come down. People can
Correct.
spend, people can borrow, etc. But why do you think it's not happening? And has RBI run out of kind of arrows in its quill, or is there something more up there?
So I think interestingly, Manoj, often we look at the guidance that is coming from monetary policy authorities. I think this is the first time ever governor has been so transparent and clear that I've done more than what is needed, because market was expecting 20 basis point rate cut, he gave 50 basis point rate cut. Having given 50 basis point rate cut, he made it very clear that at least for some time I'll go to neutral stance. And that's the time I realized sometimes market also likes ambiguity. Too much of clear strategy if we have, sometimes market doesn't like. But market always the market always, traders always look for some kind of suspense, some kind of climax kind of things. But in fact, this time RBI governor made it very clear that no more rate cut. So that's why I think the market got reversed, because people build positions before on the basis of some expectations. I think that's one primary reason. Second, as far as the growth concern, there is a demand for money is still less. I think there could be the last 2 years of high focus from RBI to cut down the overall lending growth from 40% to say 20%. and in order to get deposit growth lower than the credit growth. I think that seems to have gone beyond what they would have estimated. And today, the interest for borrowing and investing is less. Second is companies have become so cash surplus. They don't need money to borrow to meet their expansion. So that something is the one which is currently is probably, I would say, bothering for the whole growth to come back. My own belief is I think the increased focus of offering low interest rate regime, the natural transmissions will start coming in. At the end of the day, nobody can ignore the cost of capital being low. Whether it is for individuals or for the companies, if the cost of capital it becomes low, and then the return outcome that could come on investment, if it's going to become 2 times higher than the cost of capital, then naturally one will start looking at investing rather than holding back their investment. I think we are in that cusp of the space, whether it is for corporates, whether it is for individuals. I think we will start seeing that interest coming back. And given the fact that interest rates transmission takes about 6 to 9 months for the transmission to take, as the high deposit growth, high cost deposit starts coming down in terms of maturity, and then the banks will be able to pass on the benefit to the large pool of borrowers. In fact, if one looks at the home loan market, we are at one of the lowest rate. I still remember when IDB became extremely
Absolutely.
aggressive about 10, 15 years back, 20 years back. They were the first one to offer 6.9% interest rate in the country for loan to value of 90%. And today, loan to value is about 70%, and interest rates are out about 7.3 from some of the public sector banks are offering
Oh, yeah.
7.3%, which in my view is it's a pretty good rate when I compare with the US. US mortgage rates are still about 6.8 or 6.7, whereas India's mortgage rates have fallen to one of the lowest. I think it's just a question of time. People to realize the cost of capital is low, therefore it's a good time to borrow and invest into assets, which in my view will start coming in very soon.
No, agreed. And I'm on the board of one housing finance company, affordable housing, and it's the same story, because the rate at which they are able to borrow has become so low, because it is affordable housing sector. Still, the lending rates are higher.
Correct.
But you're absolutely right. Money is available quite low, at quite low rates. And so the final question, and might relate it a bit to something to do with the industries on FX. I do know that you don't really manage FX risk, but the currency has been depreciating steadily after a blip couple of years ago, when it moved substantially. So one is, do you have a view on dollar rupee, at least till such time as dollar still remains the key currency to talk about? And would you like to relate it to the context of, in your fund, I'm sure you have a dollar scheme, or for foreign investments in equity. uh, what has been the behavior of those funds, if you can tell us?
Yeah. So in fact, we launched a few innovative funds about 2 years back. We were the first few mutual funds to set up our presence in Gift City. And we launched few funds for outward remittance for Indian investors to invest in overseas market. In fact, when we launched, we did mention about that rupee-dollar benefit may also come if we invest in overseas market, in addition to the return that we get. See, it was the emerging market fund we launched. I invest in China. It was the worst time of China, but we still took a leap of faith that China will not remain as a weak economy for too long. They have also ability to come back, given the large size economy, which we are seeing it today. That did extremely well. See, we investors got the benefit of both. One, China, Taiwan, those emerging market did very well. Second is rupee-dollar depreciation also helped the investors who put money in overseas schemes from our side. So that's one benefit that we got. But having said that, in terms of view, definitely I think the standard and belief that we always have, that we must depreciate by about 2 to 3% in order to be export competitive rest of the world. Even against the basket of securities, I think there was a period where India was behave very differently compared to the most other emerging market currencies. I think we were one of the most stable currency till about last year, but not going beyond 84, 85. It was never crossing 85. Now that it's gone about 88, 89, which in my view, it is good for exporters as well as and especially at the time where import substitutes already come in India. Therefore, we don't need to worry about the current account deficit. Therefore, it benefits the exporters to a large extent. I think from RBI point of view, even from a overall monetary authorities point of view, somewhere around 88, 89 level, if it stabilizes, I think they will also be able to receive a lot of flows that could come and hit the market next year when the interest rate cut happens in the US by about say 1% by this year. Then naturally the money flows will reverse. Therefore, it will also help come in handy
True.
for the Bank of India to buy dollars so that to shore up their foreign reserves. Yeah, my own belief is the next 2 years we'll probably touch $1 trillion forex reserves, maybe the next 1.5 years. They'll also come in handy if the rupee dollar trades somewhere around 89, 90. It will benefit both the exporters. With the oil price being low, we don't need to worry about the rupee dollar under pressure. But I think one thing which I can say, unlike the past that you have seen, today's rupee dollar movement generally doesn't create any amount of panic in the market, unlike the past where we all used to get panic. Because one of the reasons I would probably say we are current account balance of payment, we are much stronger. Therefore, rupee dollar movement doesn't harm anybody from taking a view point of view. And therefore, my belief is this will remain range bound after settling somewhere around 89 level.
No, that's a very good observation. And in fact, what I have noted as well is that current account, trade account have been fairly stable over the last few years. What has been a little up and down has been the capital account, and that also thanks to some exits from startups, etc. So
Correct.
the net FDI has been a little bit of a issue, but I guess they can't keep selling forever. Hopefully, this year's net FDI is not going to be as bad as last year's. I
Correct.
agree with
One
your
of the observations also
expounding
I had,
on
Manoj,
FX.
is the people who have exited from India and they also made huge amount of money. So they have been investing for so
Exactly.
long, and when the market provides an opportunity,
Right.
it is their interest also the exercise their right to book profit, so that when they want to come back, they can come back with similar vigor when they want to make investment for the future. Therefore, while one side we can tell them that these guys are exiting, but whether they're exiting in loss or profit is something that also will determine their coming back. My own belief is they have all exited and huge profit. Therefore, they'll also come back with a reasonably good vigor. Because experience will tell them that India is the market where they cannot ignore. They have to stay invested. Therefore, I'm also very confident that FDI flow also will reverse.
Which is similar to a point which Nilesh made when I interviewed him. His observation was that China never lets investors make money, but India investors have always made money. So
Exactly.
typically investors go back happy.
Correct. Correct.
On that happy note, I'm done with my questions. Do you have any observations, any comments to make? Anything concluding remarks?
Thanks, Manoj. Of course, one of the things which I learned over a period of 30 years is I think staying committed and staying optimistic in our economic growth, I think is essential. Ups and downs always comes, uncertainty comes. Having seen both the bond market and equity market volatility of multiple kinds, which would also created a period where whether tomorrow the market will open or not, kind of things. I think what has remained constant is actually stay optimistic and stay bullish on the overall economic growth, and also stay highly convinced on the policymaker ability to change the course if it is needed, which is what has been happening in the last say rather last 10 years. Continuous reforms, continuous proactive measures is also helping the overall goal to be achieved. Therefore, I would probably say that mutual fund will remain one of the largest player in the days to come for providing finance for multiple needs, as we have been having the banks play that role last number of years.
Absolutely. I totally agree. Second that, I've been a mutual fund investor ever since I became a sensitive employee, which was, I think, 25 years ago, because you cannot trade equities, right? So I am a fan, and, I'm in your fund as well to a great extent.
Thanks,
So,
Manoj.
so great. Thanks a lot, Bala. Great to have you on the show. Really enjoyed it. I hope you enjoyed it too. And I'm sure the viewers will enjoy it also.
Thanks, Manoj. Thanks for having me on the show. Thank you.